Hey guys, yeah, it's Amphyfx here. So today I'm going to be showing you my day trading strategy, and this is how I trade daily. So if you want to know how I trade on a daily basis or my daily strategy when I'm not scalping, I'm rather day trading. So I will show you step by step how I day trade as a trader. So if you stick to the end of the video, you're going to learn how I day trade. So guys. Now, the first thing I do when I open my chart, I'll go to my other time frame, identify the trend of the what I identify the trend of the market. Now, obviously, from here, from what's going on, the market is what is trending upward, giving us what series of higher highs, higher low, higher high, higher low, higher high, higher low, higher high, right? Giving a series of higher highs, breaking structure to the upside, meaning it is trending upward, right? Breaking structure to the upside is in the sense that it is giving us what a break of structure, breaking recent swing highs to the up. Now here you can see this is what a break of structure, a break of structure. Why is it break of structure? Because it is what here is a swing high, swing high. Here is a swing high. Here is also a swing high. This is a break of structure because it is higher than the previous one, right? It is higher than the previous swing. Break of structure, swing high, swing high. This is a swing high because it is higher than this previous one, and you can see obviously market broke it from here, from this level, right? Market broke it from here to the upside, so that's why it is what called a break of structure, a break of structure. And then currently we are here. This is where the market is, and you can see market broke the structure from here, and then market eventually failed to break any structure above the swing high you are saying. Now this is a swing high, right? But market has not break above it like this. We're supposed to see something like this, and then above it, that's when we can say this market as well break structure to the upside. But as you can see, market has not broke, market have not break the structure. Then, and if you observe closely, this market is ranging between here and here. So we can see the temporary, like market is temporary ranging, but the major trend you are seeing is what is bullish. The major trend you are seeing is upward, but temporarily the market is what is ranging, because it is ranging between this one, this swing, this resistance, and this support level. All right, so temporarily the market is ranging. We might see the market break above this level or see it break below the level, so we don't know because it's currently ranging. So this is a short-term ranging, but the major trend, as I said, is what is bullish. So we should only be looking for opportunities to buy in the market. Now I have shown you we've identified the trend of the market. The next thing we should do is what we should look for our imbalance and our order block. Now order block, according to me, is the last candlestick before the big move, and that last candlestick must what must have three things involved. So this is my order block here, this one. So this is my order block, this is my order block here. this one here, because it meets my requirements. My requirement is that one, there must be what. So I said this is my other block, and for an other block to be valid, there must be these three things. These three things must be involved. To make another block to be valid other block, it must be one, there must be an imbalance. That's the huge move. Then two, there must be what? There must be FVG, fair value gap. And then three, your other block must break structure. There must be a break of structure. Now, for the other block to be a valid other block, now there must be an imbalance. If you look at this, this is an imbalance. This huge move we are seeing is what we refer to as, it's very referred to as an imbalance. And then the second thing is what? FVG. Now, if you look at this gap here, this gap here, and this gap between this black line and this green line here, you can see there's a gap. Now that's what we refer to as what? As FVG. That's a fair value gap. So the second requirement has been met, FVG. Then we have FVG, and then we have what? Third thing is break of structure. The other block must what? Break structure. Now all these things are what? Are checked, are marked out. So it means our other block is a valid other block, right? Now let's move on to our 2-hour time frame. Now we're on the 4-hour. Now we'll go to our 2-hour time frame to identify any other blocks we have again. To identify more other blocks we have. Now if you see, we have an other block here again. You can see there is this one, it meets our requirement. It broke this structure here. This tiny structure you're seeing is also a break of structure, but is what is internal break of structure. It's also a break of what? It's also a break of structure. If we are to go to a lower time frame now, it will appear perfectly. Well, because this is a bigger time frame, you will see clearly, but it's what? It's also a break of structure. Now this green candle you are seeing is the what? The last candlestick before this big move you are seeing, and you can see there is a gap between it. There is a gap. This gap you are seeing, and this gap you are seeing, the adjacent candlestick. You can see this big move, then this candlestick, and this one. So this gap is what we refer to as an FVG, and then this is our other block. Then I'll mark it out as my other block. I'll label it as 2-hour other block. 2-hour other block. This will not be our 2-hour other block. This will now be our 4-hour other block. So do we have any other block here again? We don't have any other block here again. So we don't have any other block around this zone again. So what do we do? Now you can see the market is ranging. Now this is what I want you to look at. You can see this candlestick you're seeing is what we refer to as liquidity. Liquidity, in the sense that market will come back to take out this swing. This swing you are seeing, market will come back, do something like this. One, and then tap, break this structure you are seeing. This is what we refer to as a liquidity. Now this is this is a perfect setup. If you are seeing BTC, this is a perfect setup. You see market do something like it will come down here, tap into it. If it taps into it, then what do? We go to our entry time frame. That's the 15 minutes. We go to 15 minutes. Then we go to 15 minutes. We go to 15 minutes. Look for what? Our change of character. Change of character is something like this. You see change of character. So if market shifts direction, there's what we call change of character. So if market shift direction, now here is our change of character. Then we look for order block on this 1 minute time frame. Our order block on this 1 minute time frame, it can be anywhere around here or here. Then we set our entry around that zone, wait for market to retrace back to this our order block, and then get our what? Get our entry. So it's very simple. The strategy, my daily time frame strategy, my daily trading strategy is very straightforward and simple. In fact, anyone can trade it if you understand the concept behind it. This is what we call an SMC concept, and it's very straightforward. I just explain how I trade on a daily time frame when I'm not scalping. That's it. So let me explain more on, or let me just stop here because I don't want to confuse you. I don't want to confuse you. Now this is a change of character. Then get my entry, my 15 minutes order block around there, wait for market to retrace back, then get my entry, and then boom, you wait for what the market have to do. That's it. So it's very simple. So guys, that's it. Don't forget to subscribe and like for more content like this. Thank you for watching. See you in my next video. Don't Also, to join my WhatsApp group, you can see the link in the description below. Don't forget to join. See you in my next video and see you in my community. Peace out.